Right, welcome everyone to the Keyzone Traders YouTube channel. I'm delighted today to be joined today by Thiru from Master the Markets. Thiru, welcome.
Hi, Ross. Just a pleasure just to come and serve all your audience over here and everybody listening in.
Yeah, no, thank you very much for joining us. So a little bit about Thiru. Thiru is a trader. He's an entrepreneur and a speaker and founder of Master the Markets. His career started as a cardiovascular pharmacologist, if I pronounced that right. And through an interesting turn of events, he left his PhD and pursued a financial trading career. He worked on a trading floor, presented live trading seminars, and traded company accounts, after which he set up Master the Markets. In 2010, he and his team have hung around top traders, including John Bollinger, Jim Rogers, Mark Brown, and many, many more. They've coached over 20,000 people from around the world, consulted on trading floors, traded company accounts, and presented over 150 live trading events and workshops. Thiru looks into integrating spirituality in business and his everyday life, since trading is 80% psychology, which we can all agree with. He integrates his teachings into trading and follows the philosophy of master the mind, master trading, and life. So, Thiru, I think we can all agree that is an impressive CV and resume. You've got lots of experience there. So, thank you for joining us and sharing your experience with us. Is there anything more that we should know about Thiru and Master the Markets, how you sort of got to where you are today? If you could expand on that a little bit, please.
Ross, I think you nicely covered it. Thanks for the nice intro. I think, just one thing for people listening in, just a little bit excerpts from my journey is that I was, as you said, I was in cardiovascular pharmacology, and I actually left that because of a turn of events. And, I think I just want to share with the audience here is that when I left that, I was doing a PhD in Barts in London, right? And it came to a point where they had to change my project, and I didn't like that project that they gave me. So then I thought, you know what? There's no point doing something that you do not like. And that's when I had to make the hard decision that, I said, you know what, I'm going to leave. And then I left. And you know what? The ironic thing is, at that time, it was 2008. And you know what that is, Ross? That was the financial
Yeah,
recession, right?
yeah.
There was a financial recession at that point. And my senior supervisor, after I signed the papers to leave, and then she asked me, like, Thiru, what are you going to do now that, you've left the PhD? And I said, I want to get into the financial world. I want to know how money works so that, I can free my time, do whatever I want to do. And then she must have been thinking inside. She told me, you know, if I could, I would really want to help you, but I don't know anyone in the finance sector. But I'm thinking inside her mind, she'd be thinking, here's this young kid who wants to get in the financial world, but it's a recession.
Yeah.
What is he going to do? But why I wanted to share that story was when I left that PhD doors, all I had was a determination, a belief that if you follow your heart into finding something that you truly want to do and you're passionate about, somehow or rather, everything will fit together and you will find your way. That's what happened in my life, and that's how I came into trading, go on the trading floor, mentored so many people, thousands of people, with my business partner, and then we set up Master the Market. So my main message for my whole life is that for people out there, maybe they might be working in a job or something, not happy, whatever it is, have the faith, have the courage, to really follow what you really love and love to do, that you're passionate about. Because the last thing you want is at the end of your life, you don't want to be regretful that you didn't do that, you didn't give that a go. So that's the main thing I wanted to say from my
Yeah, I
story.
think I 100% agree. And I mean, ultimately, I mean, this isn't necessarily trading related, because it's true for anything that you want to do in life, right? But you are in control of your own destiny. So, like, don't, like as you said, don't have any regrets. And you sort of talk about there about the determination and the work. Like, nobody's ever saying it's going to be easy to pursue that dream or that thing that you want to do. But if you can show that determination and the commitment to it, you give yourself the chance to actually fulfill the dreams and the desires and stuff that you have, right?
True. I would say commitment, perseverance, and passion for anything, and that's what we actually share. I mean, we talk about the markets quite a lot. I mean, those are the three things I would say is necessary for any success in anything:
Yeah.
commitment, perseverance, and passion.
Yeah, well, couldn't agree more. Couldn't agree more. So that's sort of like about a bit about you, the philosophy and stuff like that. What would you say your sort of like a trading style is? Because obviously there's plenty of trading styles out there, and I'm a firm believer that, you know, not every particular trading style is right for every single trader. So it's about, if you're coming into trading, trying to talk to as many people as possible, finding out about as many different trading styles as possible to really find the one that resonates with you the most. Like as a coach myself, and I know you're a coach as well, it's important to give your ideas, give your philosophies, give your way to look at the markets, but not to impose, because I think everyone needs to be able to take responsibility for themselves, right? So if you could explain a little bit more about your strategy and your style that you trade.
So you see, our style is, you know, more on swing trading. So as you know, in a swing, there's mainly two parts, really, isn't it, Ross? I mean, for any trader out there, it's what comprises a swing is actually a bottom and a top, isn't it?
Yes.
So either you're looking to capture a bottom to top move, where in that case you'll be buying into the move, whether even if it's trading or investment, right? So the principles are the same. And then if you're looking at a top to bottom move, then you're looking to go short. That's what actually comprises a swing. Now, if you extend the swing further into being a cycle, then it consists of both bottom to top and top to bottom, right? That's how a cycle is made. Now, then in relation to the trend, so our kind of style is based on capturing that swing and finding out how much move is left. Now, that's the real distinction with us. Anytime where we enter a trade, we want to know how much move is left. In institutional terms, this is called open equity or open profit. So most traders will be very used to, you know, seeing in the account statement, right? So when they enter a trade, they entered it, let's say at 150, it goes up to 155. Let's say they have 500 pips in profit, 150, 500. And let's say they did 10 pounds a pip or 10 pounds a point, right? If they're doing indexes. So then they'll be up $5,000. But you and I know, Ross, that money is not yours until you close it, right? Until you realize it. Yeah? So this is what we mean by open profit. It's open. It's unrealized. Or in other words, it's unrealized. But then you and I know the worst thing that can happen to any trader is, if you're not prepared, is that $5,000, right? Then the selling happens, isn't it? It retraces back. That's when they panic. The $5,000 become $3,000. Then you're like, inside your mind, if you're not clear about realized, unrealized profit and all that, you think in your mind, you make up the story that, hey, you know what? I've lost $2,000, which you actually haven't. You haven't banked it in yet. So then, see, that's the thing, right? So the main thing how we trade is we look at open profit. How much open profit was there most of the time in your trades? Was it 80% or 50% of the time there was $5,000 left on the table before it came back to 3,000, 2,000, before it shot up to 8,000, or it never took out its last highest unrealized profit of $5,000 and it came back down and maybe went to your stop loss? So this is our main kind of trading style. So it's mainly based on swing trading and knowing how much move is left every time that we enter a trade. In fact, Jesse Livermore, I quote Jesse Livermore as well here. He always used to trade like that, one of the legendary traders, that you always used to know how much move is left when you get into a trade. Now, don't take me wrong. I'll just finish off with this on the trading style, which is, I'm not saying that if you know how much move is left, you always need to get out at that point, but it's a guideline.
Yeah.
Right. And you can put that line on the chart and you can see how the price behaves on that line. And then you decide whether you want to exit, place a target, or you want to come out later or aggressively trail. That's up to you. So in summary, that is our main trading style, swing trading, and based on how much move is left.
And I think that's important, right? Because one of the things that a lot of traders struggle with is knowing where to get in, where to get out, where to target and stuff like that. But if you have statistical based targets, you have your framework, you have your guideline to be able to target. So therefore it takes that sort of ambiguity or that question out. It really can give traders confidence. And one thing I just like, you spoke in there about the principles being the same, and obviously your trading style is different to mine in terms of, you know, you're a swing trader, I'm much more of a day trader. And the way that we enter the markets is slightly different. But one thing that struck me, obviously, I was very pleased to come on to one of your live trading sessions as well. And when we were speaking, actually a lot of the principles the way that we both look at the markets was very, very similar, right? So although the styles are different, and the way that we maybe enter and like determine our targets and everything like that might be slightly different, the actual underlying principles were exactly the same. And like, again, maybe terminology was slightly different, but the actual principles were exactly the same, even though they were very two different styles.
I think spot on, isn't it, Ross? Because at the end of the day, what is all of us doing, whether we call it this strategy name, that strategy name, different names and all that, but the principles are always usually similar.
Yeah.
Either most of us are looking to capture a bounce off, which in other words, you're looking to capture a turning point,
Yeah.
or you're looking to capture a breakout, right? And breakout again is breaking out from a previous support line, which might be also a previous swing high or swing low point.
Yeah.
So most of us are looking to do the same thing, but the way we do it might differ. The tools we use might differ.
Yeah.
But overall, it's getting to the same point, isn't it, to be
Yeah.
honest?
Exactly. So obviously, you spent a lot of time coaching many thousands of people as well. Now, and also, I think one of the things that a lot of traders struggle with is emotionally dealing with mistakes that they make. Now, would you be able to tell us like maybe one of the mistakes that you've made that sort of like really sort of like affected you, or that you had to overcome, and what sort of like from your experience of coaching people, what are the general mistakes that traders make? Because I feel like coaching people is a learning lesson for me, because I find I learn things from coaching people, from the mistakes that they make and helping them as well. So I mean, you've coached many more people than I have, so it'd be interesting to hear your take on the mistakes that generally traders make.
Tell me about it, right? I mean, we learn so much when we actually coach others and teach others, isn't it? In fact, we sometimes, when we start beginning off, we have this misguided impression that, I'm going to teach them. But actually, like you said, you actually learn much more. And you actually start to even figure out some answers that you didn't know the answer for, or to questions you didn't know when you're coaching someone.
Yeah.
So I think, so I'll break it down. Really great questions. I think the first thing is, what's the biggest mistake that I have made? I would say it took me a long time to actually figure this out. You see, Ross, for a long time, and I think maybe I shared this with you before, for a good three to 4 years of my trading journey, and as I was being coached by my mentor, I was always looking to get in earlier, right? Looking to get in much more earlier into the market so that I can get more move left, right? And all of us have been there, right? We want that nice tight stop trade, right? Which gives us, let's say for a $2,000 risk, and then we want to capture a $10,000 move, right? 5 to 1. So I always wanted to do that. So I wanted to get in early, right? To get more move left. And my mentor always used to tell me, why do you actually want to enter earlier? Isn't it more better to ask the question, wherever you enter, is there move left?
Yeah.
And at least, even if there is 500 points left every time you enter instead of, 2,000 points, we can make consistent profits out of that.
Yeah.
Right? And we can increase the stake size on that. But you see, the problem with me was that when you were saying all of that, it was going in, 1 year out. Right? Because I wasn't ready to listen. And I would say, in answer to the question, what is the biggest mistake I made? Is, emotionally, psychologically, I was very impatient. Right?
Yeah.
You want something tomorrow, not even tomorrow. Some people want it yesterday.
Yeah.
Right? You want that whole equity curve to move up very fast.
Yeah.
So I had a lot of impatience, and the impatience drove me to not listening to my mentor for quite a long time, who had so much of experience, used to trade institutional money, Morgan Stanley, and all that. And I'm thinking, reflecting back, is what I was doing, right? And because of the impatience, I was always looking to enter earlier. And you know what happens to early entries, right? Sometimes they're not reliable. If they're not reliable, then you start losing money. And you and I know, Ross, that when you take a loss, right, you got to earn twice as much to come into break even on the profit, isn't it?
Yeah.
Think about it. If you lost $2,000, to get a $2,000 profit now, you need to make $4,000.
Yeah.
This is the thing people don't understand.
Yeah.
Right. And even the same thing with scaling out and everything, people are impatient. They don't want to take a loss, right? So they want to take out and take a small loss. But then the problem, what they don't realize is, but the loss eats up into your profit. So you've got to be really, very careful and go deep into each of these things. But I wasn't able to do that because of this big thing for impatience, and I would say that was one of the biggest mistakes, and that led to early entries, low reliability, not making the real consistent performance and all of that.
Yeah, no,
And
I mean, we spoke about it at the very beginning. We said like 80% of trading is psychology, and that really sort of touches on that, right? Because it was an emotional decision trying to get in early to try and make. So it's that sort of like that FOMO, the fear of missing out on profits, is actually forcing that thing. But actually, I love the a quote that I heard once when I first started trading, and it was like, you have two jobs as a trader. You have to create a plan with an edge, and then you have to follow that plan. Now it's very simple. It sounds very simple, and actually the following it is much harder than it sounds. But you like your mentor was right. Like, why do you want to get in early if the edge is this is what we do and that's what we do? Our job is ultimately to make money from the markets, consistent profit. So if you have a plan that says we do this and then we target there, why would you try and fiddle with that or amend, like, you know what I mean, like go against that when that is what is telling you that creates your edge in the market? It's
spot on. I think the principle is always the same, isn't it? To make consistent profits in the market, there must be move left when you enter.
yeah,
If you enter the market and it immediately keeps reversing against you, then there's no move left. There's something wrong that you're doing. Or you have not defined how much move is left and you're not able to take the open profit out before it reverses.
yeah,
So I would say, yeah, in answer to your question is the biggest mistake is, impatience, early entries, low reliability. But turn of life of events, it brought me to a point where I had to take some time off the screens, and that's the time when everything kicked in. I
yeah,
went back to reading interviews with traders, and then certain parts which I read before started to go in, which was a lot of them were saying patience is the main key in trading or in investment.
yeah,
And that's where everything clicked in and everything then took off to another new equity point.
yeah,
The other thing that you said is, what's the biggest mistake that most traders make that I've found, which is similar to mine? They have mainly I've seen is over expectations. They think they can make 30-40% every month,
yeah,
right? They come with that.
yeah,
And then I think, hey, hang on a minute, the richest man in the whole world, I tell them, the richest man in the whole world can't make 40% every month.
yeah,
Warren Buffett, right? He's,
yeah,
he's happy with making 20-30% every year.
yeah,
And then once you can even make that, then you can scale up your capital. That's where the real money is. So I think what the biggest mistake I've seen most traders is over expectations. That's one. And I'm sure you've seen this as well, Ross. They don't have any trading plan, right? They have no clear idea of how to construct a strategy with an edge. And most importantly, what I've seen is they're not very good at their exits. They do not know how much move is left.
yeah. Yeah, no, I couldn't agree more. I mean, to be honest with you, I was guilty of that as well. Like you said about not trading with a plan. Like when obviously I had experience in trading from my time trading in London and Hong Kong, but actually when I made the transition from there into day trading, at the very beginning, I didn't have my plan. Like, so I had to go through that process and stuff as well. And I think you're right as well. Like the unrealistic expectations. I think a lot of that is probably fueled by a lot of the image that is given by a lot of
Yeah,
social media influencers and stuff like that. But
so true.
I know yourself and obviously myself, and I know there's a few of us out there that try and give a bit more of a realistic view of trading and the benefits it can have. Like we don't all have to drive around in Lamborghinis to be successful in terms of as traders and stuff. But it's I think you're right with that as well. That's one of the because again it's an emotional it becomes emotional, isn't it? In terms of when they don't achieve what they think they can, they feel like a failure, even though they're probably on the right road to get into where they would want to be, sort of thing.
Spot on. I think what people underestimate is also, I really like the thing that you said. There's two parts to this, isn't it? One is have a good trading plan that you really believe in that is going to edge, and the other thing is to execute it,
Yeah,
right? And I think a lot of people underestimate the second part as well.
yeah,
But two things got to come together, right? Just like how you have to cook and the ingredients in a recipe, two things got to come together here. One is the intellectual belief in your trading plan that it's got an edge,
yeah,
right? That it will finally realize and monetize to become a net profitable strategy and overwrite the losses. So first, the intellectual belief. The second, when you execute it, the emotional alignment, right? That you believe in it, right? Emotionally, you're stable. Fear won't come. Greed won't come because you're intellectually aligned with your emotions. So
yeah,
these two things got to come together, the intellect and the emotions, and both, like we have been agreeing here, needs work.
yeah,
You just can't say that you've got the best strategy in the world, but you're not emotionally aligned with it, you still can't execute it properly. And the same principles, I mean, we're talking principles here. Same thing with going to the gym, right? I mean, I know this guys like Tony Robbins and all that, they always joke about this, and they say, you know, everybody in the world, right, knows how to lose weight.
Yeah.
Okay, you don't eat junk food after a certain time, right? You don't eat those crisps, you don't eat that fat burgers and the oily burgers and all of that. Go to the gym a bit regularly, even exercise just 30 minutes a day. That's more than enough for 5 days. We all know it. It's all there. So much of information content. But how many of us are emotionally connected with it to follow it every single day, despite what the weather is, whether it's hot, now it's roasting at the moment, but whether it's shining, roasting, you know, cold, snowing, how many of us can get out of bed at the same time every day to do that work?
Yeah.
To get what is necessary to lose that weight. This is what I mean. Intellectual and emotional alignment. Both needs work.
Yeah, I couldn't agree more. And you know, I take it back to something I heard once, and it said it's like, you know, the saying, knowledge is power. Well, actually, it's not the knowledge that is power; it's actioning the knowledge that is the power, right? Because as you say, we all know stuff. Like if we take it into trading terms, we know that we should manage our risk. We know that we should have a sensible risk. We know that our plan has an edge. But actioning the knowledge of that is very different to actually having the knowledge itself. And again, like you say, that's something that needs to be worked on. Mm. So one question I also always like asking people as well, and you may have already answered this a little bit, but if you could take Thiru today and sit him down with Thiru from 2008 when you left your job and you got the whole of your trading career ahead of you, if you could give him one piece of advice from yourself now, what would that be?
I would be the first thing is, you know, which I underestimated is get a good, professional, reliable mentor. It's not easy. I mean, like we always talked about, Ross, you know, there's a lot of media hype out there, right? That, you know, you can drive around the Ferrari tomorrow, Lamborghini, you know, showing all these beautiful houses that you can have and all of that, right? But find one who's really good. And in my definition, yes, there's two arguments to this of a good, reliable professional mentor. One is they say, even if they're not doing it, but if they have gathered the knowledge from the thousands of professional traders, millionaire traders out there, they can be a good coach as well, right? So those are the reporter kind of mentors, right? They just report what has been working. The other type of mentors are the role model mentors who have not only gathered that knowledge from the thousands of traders out there, but they're also living it, right? They've gone out there in the snow, in the sun, you know, in the toil every day, you know, in the markets, you know, got the losses, come out of it, you know, drawdowns, pull it up, back up. They've done the hard work too. So those are what we call the role models. And my kind of personality is, yes, you can learn from both, but I would say, you know, if you can find one who's a role model. Yeah. One who has also got the knowledge, also living it, because then he can transfer that energy onto you, and he can also know what's not working in the ground as of now. So that's what I would tell myself, or my younger self, is, you know, yes, it would take time, but invest that time to find a good, professional, reliable mentor, and then learn from them. Really listen hard, not like me was going in 1 year in, 1 year out in the beginning, and learn from them, and then practice, and then that's how it'll start, and then. For those people, I would say, if you are a bit stubborn, you know, like me in the beginning, you know, a little bit like you think like you want to do it all yourself, right? You don't want to spend this, you know, time this, you know, I'm good enough, I can do it all by myself. Then maybe I would say, start with good trading books, right? Really good trading books, hunt them down, right? 20, 30 good trading books, find them, find all the common points. But finally, I would say, really important question to answer is a principle, which is always know and figure out somehow how much move is left before you enter a trade. So that those are all very important things I would tell myself. Yeah,
I think you're right with the coaching thing as well. Like, you know, I haven't met a single successful trader that didn't at some point have a mentor or coach, right? And again, I quite like using a lot of sports analogies in my sort of like teaching and coaching and stuff like that. And it's like, you know, elite athletes, they still have coaches. They may be at the very top of their game. They may be the best in the world, but they still have a coach, or they have a team of coaches, you know, because they're always looking to improve. Now, those coaches aren't necessarily as good as them as the actual task that they're trying to complete, but they still have knowledge and added value to give it to it. And I think, again, that's another really key thing to point out as well is a lot of people, a lot of traders out there will sit there and say, look at my profits, like this is what you could have. But actually, coaching, having the skills to coach someone is very different to actually having the ability to do the task at hand. So to be able to find someone that has the ability to do both is more important. Like like I say, it's like somebody who is living it and actually is a successful trader. Just because somebody's trading, you know, a $10,000 account or a $100,000 account, and somebody else is trading a $10 million account, that 10 million, the guy that's trading a $10 million account is not equipped with the skills to coach someone. They're not going to be the right coach or mentor for you, sort of thing. So again, it's doing the right research into finding that right mentor who has both abilities to be able to coach and to trade themselves as well.
I think spot on, Ross. I think you well summarized it very well, isn't it? I mean, so the role model actually got both because you know why? Because before he's got to implement it on the ground, he's got to test different things, isn't it?
Yeah.
From the knowledge, right? So he's done all that reflection. He's going through a reflection because, as you and I know, even in trading, you gather all this knowledge and everything. Same in business, right? You gather all this knowledge and then you test it on the ground, right? Yeah. And you know that some things don't work. Hey, that reporter, you know what? I've been that one, right? That doesn't work. Okay, this one works. Okay, let's put on this. And also, some things only work according to certain situations and time, and also to the individual's personality also. So they got to test and see. So when we get a role model kind of a mentor, it's really good because they've done all the reflections. And reminds me of one of the clients who joined us as well. He's in a big Canadian bank. I mean, manages about 600, 700 guys. And then very passionate about trading, right? He did a whole thesis, not even by a whole supervisor or anything. He wrote a whole book and he showed it to me all by himself. So passionate, right? Very highly successful in his career. And he told me, he asked me specific questions and I was able to answer it just in 2-3 lines. And he told me, you know what, Thiru, someone can only answer it to that position if they have reflected and really done it on the ground. And that's why I will join you guys.
Yeah.
Right. So you're absolutely right. I mean, that's one of the biggest advantages when you join a mentor who's a role model mentor, who's not even learned the knowledge, but also put it on the ground and see what works and then can teach as well, because teaching is an art, because that reflection has got to have happened to organize that knowledge to teach in a way that the student also understands as well.
Yeah, no, I couldn't agree more. Well, Thiru, thank you very much for being with us. If you could just let us know where we can find you, what the future holds for Master the Markets, and yeah, just really appreciate your wisdom and experience and sharing it with us today.
That's great, Ross. So I think one place people can find out is, I would say, start off with the material on 7 steps to CTP.com. CTP stands for Consistent Trading Performance. So it's 7 as in the number 7 steps to CTP.com. And that's where they can learn about this systematic methodology to find out how much move is left, right? And it's a framework to find that out. And other than that, I mean, generally they can find out on our website also, masterthemarkets.net as well. In terms of future, what does the future hold for us? I would say mainly we are in the part of scaling up right now, in terms of scaling up to more institutional money is what we are looking at, and also spreading the truth. Like you say, there's not many people who are really giving the truth. They're giving a lot of hype and everything, isn't it?
Yeah.
So it's spreading the truth, and that's why we like to collaborate with you as well. And that's why we interview you first, because you've got the similar values, which is really to give the truth and not the hype, So you want to spread that truth further out to Master the Markets as well, with an increased marketing outreach and all of the intention to help other passionate traders out there and change lives.
Yeah. Well, Thiru, thank you very much. What I'll do is I'll get those links and I'll put them in the comments box below on the YouTube channel as well, so people have access to that. But Thiru, thank you very much for, as I say, taking the time to be with us today and sharing your experience. Been a real pleasure having you here, and hopefully we can have you back again soon.
Thank you, Ross. Thank you for having us. Such a pleasure to serve. Thank you.
Cheers.